Good afternoon. This is Chris Robinson, Robinson Ag Marketing, with today's post-close grain and livestock comments for Thursday, October 9th, 2025. Well, if the government had been open, we would have gotten a USDA report today. We did not get that. And the market is back to that old analogy: a bull needs to be fed every day. We haven't had any tweets about any Chinese meetings. So because of that, we just drifted lower here today. We looked like we were going to have a little bit of a pop yesterday in beans. No dice there. We finished down 7.25 cents at 10.22 and a quarter. December corn down 3.75 cents at 4.18 and a quarter. Chicago wheat looked like it had been trying to make a little bit of a fade and rally, settled down 0.75 cents at 5.06 and a half. We're worried about 5.02 if that level fails, because that'll be a new contract low. Kansas City December finished down 3.5 cents at 4.89 and three quarters. Again, just a day in the red for these grains. And again, every day that the government stays shut down, it's less of a chance that we get some information that would change, change the trend. It's really what it comes down to. And now we're starting to look towards 2026. December corn of 2026 at 455. What's your input cost going to be? What's your break-even cost going to be? Can you start figuring that out now? November beans of next year, 2026, we're sitting here at 1065, 1068. Again, it's a heck of a lot better than 968. But we have to start looking at a plan for what we're going to do next year. I know it's hard right now. You're harvesting 2025. You got your handfuls of that, but you really it's time to start thinking about that. Same thing with July 26th Chicago wheat. It's trading at 550. I think that this is still a market where there is potential for slippage, and you need to be defending what is there revenue wise, but you also need to be making sure you're not overspending on your hedges. So that's something I work with our farmers and producers. I just, we have to wait and see if we get some sort of either the government gets reopened and we start getting some fresh news. Right now, there is no bullish news out there. China's sitting on its hands. And the funny thing is, it's not funny if you're a producer, but the whole world is waking up to the fact that China, hasn't bought beans from us in 7 months. We've known about this forever. Right? It's just starting to get caught up with the national media. And I kind of think that might be a reverse indicator that, we're probably nearer to the end of whatever this is with the Chinese sitting on their hands. The bigger problem is, from a production standpoint, is we grow 4 billion bushels of soybeans every year, give or take, a little bit more, a little bit less, say 4 to 4.2 billion bushels. Historically, China took 25% of those bushels. It's going to have to be a heck of a biodiesel program to chew through 1 billion bushels of soybeans if China doesn't come back. And over the last 15 years, people act like this is just a new development where they've been buying all their beans from South America and Argentina and everybody but us. It's not. They've been doing this for 15 years. They've gone down there. They've spent a ton of money building roads. They've spent a ton of money building infrastructure because they got tired. Remember, go back 10, 12, 15 years. Every time there was a harvest, there'd be trucks lined up because they had basically one road, leading to the ports. And then every year we'd have the strikes at the ports. So the Chinese have, they spent a lot of money because I think they were playing the long game, and that is something that I'm more concerned on longer term, as South America produces more and more soybeans and corn. It's going to be very, very important for us to try and maintain or get back the 25% of our production that China used to take. That's really the most important thing. The rest of it is just words. But if we get in a situation where China says, you know what, we don't want your beans ever, no matter what, then we're going to have to be making some different decisions here at home what we're going to do with our crops. Already, guys are going to have to plan next year and say, does corn at 450 D's on the board in 26 and at 1065 November 2026, does that pencil in? People are going to be making some difficult decisions. And yeah, like any other business, the people that are going to be the most pressed is anybody that's borrowing money. If you're renting land to farm, it's going to be tough because it has to cash flow. If you're somebody, you're a seventh generation farmer and you've got all your land paid off, you're going to be in a different situation where you can sit through because your cost of productions are less. And just, not having to pay the rent, it gives you a huge advantage. So life's not fair. It never has been fair, but I think we're going to be in a difficult situation moving forward if we don't get these Chinese markets back. So be that as it may, I'm here. I'm hoping to help anybody who works with me, no matter what your situation is. If you're cash running or if you're a seventh generation farmer and you just want to do a better job with your marketing, that is the wheelhouse I live in. I concentrate on managing risk for clients, helping them stay in position so that we can sell our grain when we want to, not when we feel like we have to. You want to be selling grain when you want to, not when your banker or your spouse is telling you, hey, you got to bite the bullet here. So that's what a hedge can do for you. It can help keep you in position so you can wait and make the sale when you want to make the sale. And the flip side, everybody's always scared when they make a sale that, as soon as I sell it, the basis is going to move, and it's going to move 40, 50 cents on me, and I'll made a bad decision. The hedge for that is after you make the sale to look to re-own it. So that's the stuff that I work with 24/7 with farmers and producers. I've been working with farmers and producers since 2010. Prior to that, I was on the floor from 1991 until 2009. And I was not a broker on the floor. I traded my own account. I had a couple employees, and all we did was go to work every day and look for opportunities. And that's the experience that I can help bring to your operation. And that's the value that I add. So if you're looking for help, give me a call, 312-638-8868. Now, we're going to wrap up real quick with cattle. If you read my letter this morning, you knew that it has been very, very technical. Once November went through 363 in the feeders, that opened up the door to where we're at right now. We're at 375. My guess is that this thing could keep going up to probably 385, maybe the 390s. It won't be long before people are calling me up saying, hey, how much is a $4 feeder call running right now? Because that's the other thing. If you're selling cattle into this market, if you think if it's going to continue to go higher, you can buy some calls and stay in the game after your sale. These fat cattle, again, looks like we're going to be talking about possibly 250. We traded the 240 and change today. If we take out the contract high in December cattle, which is up there at 243 and change, that's going to be something that we're going to be looking at as well. This 240 level is a big, big, big resistance for the December fat cattle. And then on the flip side, you've got pressure in the hogs. That's a whole different supply and demand situation. Hogs just had a really friendly pig report about 10 days ago. And what have we done ever since that friendly report? We got really good news from the government, and boom, we're moving lower. We've given back about 25% of the rally that we had between April and September. We had nearly a $25 rally. We've given about 25% of it. My whole idea is don't worry about the fact if you didn't sell it above 90 cents. What you don't want to be do is you don't want to be sitting in a situation where you sit here and watch these hogs go from 84 cents to 78 cents to 74 cents, something crazy like that. So it's not too late to set a hedge. Yeah, you might have missed the top, but if that's concerning you, if you want to get something on the books, give me a call. We can talk about what would work for you. Again, this is Chris Robinson, Robinson Ag Marketing, 312-638-8868. If you're not getting my letter set up, please sign up. I do these free podcasts twice a day, in the morning and the afternoon. Once a week, however, I spend about 20 minutes, and I do 20 minutes to a half hour, and I do a breakdown, and I really dig deep into one of the charts that we're looking at, or two of the charts that I'm looking at, and try to explain to you the logic or the thought behind what we're looking at as far as hedges and those specific contracts. So if you want to learn about that, I invite you to sign up, take a look. It goes out every week. Sometimes I'll do 2 in a week if it's very important, if there's something interesting to talk about. But every week you'll get basically a private class with me talking about my thoughts and feelings and exactly why I'm looking at what I'm looking at. Have a great rest of the day. Take care.